welcome to the OANDA MarketPulse charting analysis video. My name's Craig Erlam, Senior Market Analyst at OANDA. Today we'll start with natural gas. It's one we haven't really touched on since Monday, but we have some potentially some interesting developments here. So we had the pullback off of the 50 fib, I think it is, here. This was back on 10th of January, so we're looking at just over 2 weeks ago now. Following this pullback, we did see natural gas go into consolidation mode. We've got this nice flag set up here. Now we've had an attempted break through the bottom of this flag today. This follows 2 days in which we saw attempted rallies back towards these 220 levels. Both times these rallies were rejected at 220 and they were dragged lower by the bears. We saw a second attempt, of course, yesterday by the bulls to try and drive it back above 220, and once again they were defeated by the bears and pulled back towards these 212 levels. So these two long upper wicks, potentially quite a bearish signal in what is a typically bearish setup, and we followed this today by the bears retaking control and driving below the flag formation. Now, as of yet, this flag has been protected, but if we look back at, say, the 4-hour chart, you can see that we've had 2 attempts over the last 2 candles to break below here, running support around these previous levels of support from a few days ago. Again, a look at the hour chart, you can see that we've actually had 3 or 4 attempts now to break through this level. A couple of occasions we've actually been successful, but again, the bulls are just holding this off for now. But to me, I think this does look still quite bearish. I do think when you get this number of attempts to break through such a key level of support, quite often you can actually see it give way. Quite often you can see it give way eventually. Usually around the 3rd or 4th attempt is when it will start to give way. So the fact that we've had so many and it's been so well protected so far could be viewed as bullish in some by some. For me, I think the fact that we're continuing to see the bears push and push and push, I think we will eventually see them win this one, and we could see then a move back towards initially towards these lows around $2, and then below here we could see a move a little bit low. Now, the great thing about these setups is you can tend to not project. The great thing about these setups is when you've got these kind of flag formations, what you tend to do is what you tend to see once you see a break of these is you see the size of the move into the flag projected lower following the breakout. So in this case, if you want to be fairly aggressive, you could say around 242 back towards 202, projected lower would take you back to around 170, which coincides with these previous lows from December 18th. If you were looking more conservative, you could take the flagpole being the move from the small correction that we had here back to around 226 into the flag, which are another round 25 cents, and then projected lows you'd be looking around to around these 180, 185 levels, which again coincides with these previous lows here. So depending on whether how conservative you are, these would be your projected levels, well, based on what you can quite often see with these charts. But we haven't yet had the completed break below this level, but we are seeing it heavily tested. Let's stick with commodities. Let's check on copper. Now, the only thing I wanted to highlight here is we have rallied up towards these 207 levels. Now, we were talking about 206 yesterday. We've actually gone all the way through to 207, where we have run into resistance today. Now, 207 still coincides with these previous support levels between 206 and 207. You've also got the 55-day simple moving average here. Also, on top of that, you've got the 61.8% Fibonacci retracement level, which goes from the December 31st highs to the January 18th lows. I do think this is a key level of resistance. If we can see a break through these 207s, then I would be looking back towards these 214 levels, well, just below these 214s, which coincide with those previous highs. You may run into some resistance as well around these 211s, which again was a previous region of resistance throughout November and December. But there is a lot of resistance being faced at this stage. If we look down at these lower time frames, see if we can find any indication that we are actually seeing a more prolonged reversal. You can see that we've kind of got this topping formation forming here. Not a topping formation, actually. This potentially, this potentially actually looks like we may see a continuation of that buying. You can see that this looks very much like a flag formation. My apologies, I didn't mean to refer to it as topping. Usually it's higher highs and higher lows, which makes it look like a topping formation. In fact, this probably actually looks more bullish, at which point we could be looking at a move back towards these 211s. Again, what you tend to do is take the size of the move going into the flag and project it higher. Now, if you were feeling particularly aggressive, you could look at these 197.50s into the 207s and project that higher. Or if you wanted to take the from the most recent lows, well, I wouldn't be looking at these most recent lows. I think that would be too small a flagpole, to be quite honest. So yeah, that's potentially actually looking quite bullish at this stage. So that would be a key level of resistance. Again, next key resistance level, we'd be looking around those 214s. Beyond here, this would be the most significant. This would be a very significant resistance level. I think around the 228s, 223s. At which point we may be looking at a key test of. There you go, the 50% retracement of the move from these highs to the lows on January 18th, and this would be then, if we do see a move back towards there and we see this hold, that'd be in keeping with the broader trend as well. So maybe we are just looking at a broader retracement at this stage. Of course, I'm getting a little bit ahead of myself with this fib, but maybe we are looking at a broader retracement at this phase, at this stage, at which point we could be seeing a move back towards these 214 levels. Switching to currencies now, one thing I wanted to highlight on cable. You can see that we had a test of the lower part of this, or what appears right now to be a rising wedge. We still haven't really had it confirmed to the upside. The thing about these wedge formations, I guess, is that while it can look like a rising wedge at one stage, which is typically a bearish continuation pattern, all it needs to do is break through the top of the wedge, and all of a sudden it starts to look more, resemble more of a flag, which again is still a bearish continuation pattern. So until we've had three confirmed touches, we can't really know for absolute certainty. At the moment, it looks like we are seeing this one rejected once again, and the fact that it coincides with prior resistance as well does help with this. But we have broken above these highs, so potentially suggesting that we are going to see maybe a bit more of a move back towards these 145 levels. But I guess we'll see how the price action reacts here. The early indications suggest that, well, we've seen a rebound off the top here. But nothing overly bearish at this stage. To be honest, it looks at this stage like we are going to see a bit of a continuation of this move back, potentially towards those 145 levels. But I still think this is a bearish setup overall. Again, we look at the daily chart here. The trend is very much in our favour here. Whether we see a move back towards these 145s, which will give us a bit of a correction, we'll have to wait and see. As of yet, as I said, we haven't seen the confirmation in price action of a reversal to the downside, and that most recent daily candle is looking quite bullish. Let's move on to dollar CAD now. Dollar CAD, we are seeing these 140s tested now. We have traded actually below here, back towards 139.50s. Coming under a lot of pressure today because of the strong rally that we've had in oil. The rally in oil came again today as we heard from Russia claiming that they are open to talks with OPEC to discuss production cuts. Now, we have seen oil pull back because there's now been reports that OPEC that has not got any planned discussions with Russia to discuss these production cuts. So these are the type of stories which tend to flow out. First, you get the speculation that there's something's gonna happen, then you tend to get either the stories rejected, or at the very least it's played down, and that's exactly what's occurred so far today. So the fact that we saw a 6% rally in oil at one stage was very favourable for the CAD, which is why we broke through those 140s back towards 139.50, and then we've had those comments. Oil's now up around between 3 and 4%, which means we've had a pullback in the Canadian dollar as well. It'll be very interesting to see how that daily candle closes, to be honest, because I still do believe that there's possibly more of a correction to come in oil in the coming days. Although again, that very much depends. I guess we'll see how these daily candle plays out. I do have a WTI chart which I'll actually show you. But again, if we see a nice little green top here, that's a very nice hammer on a key support, on a big fib level, on a prior resistance as well. So I think this could be potentially showing signs of a reversal in dollar CAD, at which point we could be looking at a move back towards those 147s. While we're talking about oil, I will bring this WTI chart into play because we're seeing a similar thing here actually, which actually now makes me think, given that reversal in WTI today off the back of those comments, that maybe we are seeing it top out around these $34 levels. You can see that it's run into that price support, and we've had a perfect rebound round off those 34s. It also roughly coincides with the 61.8 fib as well. If we can see a nice bearish candle today, then maybe that would suggest that this correction is in WTI has been exhausted, helped of course by those comments from OPEC earlier on today. Finally, Euro Yen we'll touch on, because we had that bottoming formation here, the fact that we had these lower highs, lower lows. It looks like it on the back of bullish divergence, showing signs of trend exhaustion. We saw the break through that level, and now we are actually trading above these 129.65 levels, which was prior support. 130 is going to be the next key test, and at this first time of asking, it has failed to break through those 130s. If we can see that broken, then I'll be looking back towards 130.40, the 50% retracement, but more importantly probably the 131.40s, 61.8% Fibonacci retracement, prior support, and given how long it takes to get there, potentially seeing a test of this descending trend line as well. So potentially a little bit more bullish moves to come in this Euro Yen pair. But again, I want to stress on this, tonight we've got the Bank of Japan monetary policy meeting. We may potentially get some form of stimulus from the Bank of Japan, which would be bearish for the Japanese yen, or typically would be bearish for the Japanese yen, which would therefore be bullish for this pair. Or at the very least, I would expect to see some more dovish rhetoric, and I think that's exactly what the markets have priced in at this stage. So be aware, while this is looking bearish for the yen at this stage, we do have a big Bank of Japan meeting tonight, and that could heavily impact how this plays out between now and the end of the week. For more in-depth news and analysis, check out OANDA MarketPulse at marketpulse.com. You can also find out more about OANDA and sign up for a free demo account at oanda.com. Here you'll also get access to OANDA Forex Labs, which has a lot of great tools designed to help you with your trading.